Welcome back. Now, Altron has reported on strong operational execution from its core continuing operations. However, provisions and impairments in non-core subsidiaries have dragged on the performance. The execution of strategy has led to growth in revenue from continuing operations. Altron Group CEO Werner Kapp joins us now to unpack the group's interim performance. Thank you so much for your time, Werner. Now, things look different when you looked at the results from an Altron Group level and then also from a continuing operations. What do we need to take note of here?
Hi, Zanati. Thanks for having me. I think what you've got to take note of is within our group operations, you may recall we issued a trading statement about 4 months ago about non-cash provisions that we took in two of our businesses that are held for sale, which is the Altron Document Solutions business and the Nexus business. So the operating loss, I think, that you're referring to comes from those two businesses. If you look at our strategy that we're executing on in our continued operations, that's where I must say we as a team are really pleased to be able to deliver those kind of results. 11% revenue growth, 32% profit growth in current trading conditions. We're really pleased about that.
Well, let's get into that meat because I do know that one of the stars of the performance is Netstar. And there it achieved record interim revenue. Talk to us about that milestone and the sustainability of that momentum.
Yeah, really pleased with the Netstar performance. We really set about profit improvement strategies in both Netstar and systems integration, two of our biggest businesses. Really pleasing performance. I think we've gone back to basics there, really making sure we keep our customers happy, looking after our customers through their life cycle. So, nice to see those kind of numbers going through. I'll tell you a couple of interesting things. In H1, we managed to add 80% of the subscribers that we added in all of last year. So that's obviously quite a pleasing statistic. And what we've also done is really invested in our fitment centers. We've added 21 fitment centers in the country. Last year, this time, we added one Netstar customer per 4 minutes. As we speak, we're probably adding about 4 customers every minute, or fitting 4 customers every minute. So I think it really is just, there's no excuse for or no substitution for focus and hard work. I think it's really just our people kind of being out there every day trying to service our customers and protect them and look after them.
Well, focus and hard work under the backdrop of a really challenging macroeconomic environment. Are there any headwinds that you are focusing on, that you're putting laser focus on, that could maybe threaten the earnings momentum in these businesses, at least in the short to medium term?
Zanati, I think probably not, other than the headwinds that everybody else is experiencing. I think there's obviously quite a lot of focus in the next 6 months coming into the elections. Typically that can be quite a tumultuous period. I think what we've really done are 3 things. We certainly have buttoned down the hatches from a cost perspective. As you saw in our results, our operating costs are only up by about 4%. So we managed to keep that well below inflation. We're fortunate enough to have quite a healthy balance sheet. But I think the biggest thing for us is to focus on what we can control. So we've got quite a growth mindset. Don't want to put our heads in the sand and ignore some of the challenges. But I think, we're lucky enough to have a set of assets that really help solve the problems that our customers have. And I think if we could keep on focusing on them, hopefully we can continue the momentum.
Yeah. We spoke about Altron Document Solutions and Altron Nexus being held for sale. How have you gauged the appetite for these businesses in this kind of environment?
There are appetite for these businesses. I mean, there's an old kind of saying that every business has the right owner. So right now what's very important for us is to manage these businesses well. I mean, what tends to happen, you've seen that some of that in the results, is people can take their eye off the ball when they hold these businesses for sale. We've got strong leaders in these businesses. There is appetite out there, and we are actively engaging buyers.
All right. Well, something interesting that the shareholders did share today was that you decided to increase your dividend payout. What was the motivation behind this?
I think we've got a very strong balance sheet. The fact that we've managed to improve our cash flow in line with earnings. Cash is king, and we really felt that our profit improvement strategies is really starting to yield results. So we want to reward shareholders for that. So we've increased our dividend payout ratio from 40 to 50, which, if memory serves me correctly, I think on a year-on-year basis amounts to about a 56% increase in the dividend payout if you're a shareholder.
All right. Well, as we wrap up the conversation, Werner, I mean, the company is working to simplify its operating model. What will that entail?
So we've specifically made reference to the fact that we're going to be integrating 3 of our businesses, our systems integration, Carabina, and managed solutions business. Those are 3 of the businesses that operate in our IT services segment. So we're really bringing those businesses together to be able to better serve our customers. Again, I'm a big believer in focus and simplicity. And we really think that when we bring those 3 businesses together, it'll just make the businesses simpler to manage. But I think most importantly, it will lead to a better engagement for our clients.
All right. Well, thank you so much for your time and for your insights, just unpacking those results that came out of Altron earlier on this morning. Werner, that was Werner Kapp, CEO for Altron Group.